This is Matt from InvestiQuant. Today is Tuesday, July 14th, 2020. And this morning we saw a sell-off into the open, which actually ended up giving us a gap down this morning. I was not anticipating that. I thought we were going to gap up. But the sell-off into the open ended up giving us a gap down. And looking at the ES here on the top left, we ended up gapping down below the prior day low. We also did that in the NASDAQ as well. But we gapped down, and since then we have pushed back up to the prior day's closing price. So we filled the gap, and we're holding in the top portion of the range. So we gapped down below prior day low, filled the gap, and holding up in the top half of the range is a pattern that has developed since the open this morning. So what I want to do is just go ahead and take a look at that pattern and see what has happened historically going into the close when that pattern is in play. So I'm going to look at all four instruments. I'm going to use a time-based entry, and I'm going to use an entry time of 2:30 p.m. Eastern time. So let me come down here, select that. It'll be set up as a long trade, so it'll enter long at 2:30 p.m. Eastern time, and it will exit at the close of regular trading hours, which is 4:15 p.m. Eastern time. I'm going to use the opening filter that it opened below the prior day low, so just add that right there. Then I'm going to go into the post-open filters, and we're going to build out this price action of filling the gap and holding in the top portion of the range. So to do that, all I have to do is come to this opening gap section, hit equals next to gap filled. That's easy enough. And then go to where the close is relative to the intraday range. And I can say that it is in the top half of the range as of 2:30 p.m., which is what this will be based off of. And lastly, I'm just going to put it in a bullish market environment like we are currently in. So above a 200-day moving average and also above a 10-day moving average. And then I can run the results. All right, here we go. So this is the results based upon going long at 2:30 p.m. Eastern time, exiting at the close 4:15 p.m. Eastern time when you gap below the prior day low. You fill the gap and are trading in the top half of the range as of 2:30 p.m. Eastern time when you are above the 10 and 200-day moving average. So in a stronger market. ES 75 samples, NASDAQ just 56, YM 86, Russell 44. And looking at the win rates here, ES really strong on the win rate there. 2 out of 3 of those historically have ended up closing higher. The NASDAQ's not seeing that same win rate. It is a little closer to neutral, 46%, so just under 50-50. YM somewhat favored like the ES at about 62%, and Russell similar to the NASDAQ, closer to that 50-50 level at 52%. So YM and ES have both reacted positively for this pattern historically. And let's see, average win size in the ES, a little bit bigger than the average loss size. Looks like that is true for the NASDAQ as well. So NASDAQ, a larger average win than loss. That is not true for the YM. So YM, the average win is a bit smaller than the average loss, and Russell, the average win is greater than the average loss. So 3 of the 4 instruments have had larger average wins on average when they've worked than the average loss. And looking at the win rates, 2 of the 4 have been a bit bullish. The other 2 of the 4 are more neutral. So not getting consensus across all of them, but it is leaning a little bit more as a whole to the bullish side. So if we are trading above the midpoint of the session at 2:30 p.m. Eastern time, that would be a pattern that would be applicable for today. So we'll find out here in a little bit. Good luck today, and we will see you next time.